folks, welcome back to the class. Ladies and gentlemen, today our topic is type of orders. Now there are four types of order. I can keep it nice and simple. I don't want to confuse you too much, but there is a market order, limit order, stop order, and stop loss order. Now, these are the main four orders. Simple terminology on them is just buy and sell, but obviously there are names, abbreviations of these, which I'm going to explain it to you. Now, let's start with the market order first. Now, the market order is, for example, the euro dollar price is 1.25. That's right now, the present. It's a present price. Market is 125. So let me say this is a 125 and the market goes to 1.25. What you do is you quickly enter. When I make a circle, you enter the market, a buy button, because you're thinking the market is going to go up. So your target around here is, for example, 1.40. Now you're sitting in front of the computer and the mouse in your hand. These scalpers do, and these are the day traders do. The swing traders don't need to do that because their plans are different. So the market is going up slowly and slowly and slowly and slow. As soon as it comes to 140, I'm going to press my button. That circle means I press the button. Get out of the market. Whatever the market price is, or whatever your target is, 1.40, even if it's come down to 138 and you think, I want to get out, you press the button on 138 and you're out. Now that's called market order. Right, whatever the market price is, you take that. Now, vice versa, if you want to sell, the price is on 140 and you want to sell. Now you enter the price 1.40 as you press your button quickly on 1.40 and you wait for the market to come down to 125 and you want to get out. So you're waiting there, sitting in front of the computer, watching the market go up, down. Might give you a heart attack as well sometimes, that it's going to cross your line, but it's not going to come down straight in one line. But as soon as it comes here, you quickly press a button, sell, a buy. This is a buy back, isn't it? Because you sold it before. Now, that's what the market order is. The market order is basically whatever the market price is, you're sitting watching in front of the PC and you are taking an entry on market price and exit on market price. That's market order. And you're selling, click sell on the market price and buy back when it comes down to your on price, which is 1.25. That's just an example. If you're trading any other pair, obviously you go accordingly. The market price, simply, I'm saying that again, enter whatever the market price is and exit whatever the market price is. Now, let's see the stop order. The stop order is a buy and sell. It's a both ways. It works in both ways. For example, what happened is, your current market price right here is this one, right? So you put a limit order that you don't like this price here. You put a limit order here, limit buy, like this one here. Limit buy. So as soon as the market gets there, you buy, you are entered here. Now your target, for example, was here, I would again say 140. Now the market is struggling to go above 130. And you have a reason to believe, you know what, either I have to go somewhere or I can't be bothered to wait, or maybe there's a data coming out, a news coming out, and market price at 130 keep rejecting it. So you want to stop. You want to stop the order? So you execute the order on 130, get out of the market. Same thing here. You put a sell limit order, and you come back and see your computer after a couple of hours. When the price goes up there, you take an entry. The computer will take an entry for you because that's a limit order, right? Now, when the market starts coming down, it's coming down. You're not expecting market to come to 1.10, but market is struggling to cross 120. So you open your laptop and you say, you know what? I got to stop this order right now because I don't think it's going to go all the way up here. I'm not going to get 70 pips. Yeah, I think I've got 40 pips. Why don't I get out now? So you stop it. You press a button, stop, and you get out of the market. That's what the stop order is, right? Let's have a look at the limit order now. Now the limit order, is for the swing traders basically, or the day trader. Anyone can do that. I mean, scalpers know, I wouldn't never advise them to do it. I mean, they can take an entry, but the exit they have to do. Like, limit order is the market is right here, and this is your limit order. You want the market, if it comes down to, for example, we will say this price was £1.10 and this is 1. You don't like 1.10, you want to take an entry. So you place a limit order and you can close the computer and you can go and come back after a couple of hours or whatever, see if my order's been hit. If the market comes down to 1, to your level where you want to buy, then it will automatically, your trade station will execute it. When the trade station will execute the market, you are in the entry. And then limit order is going up. It's going up. And then you also put a limit order here to sell. If the markets come down to my level right here, which is 1.50, for example, then the order, your trade station will automatically execute your order. So you don't have to be in front of the computer all the time. So this was the buy limit. So buy limit, market is here, but you don't like this price. You place an order, a limit order on your trade station, and you put your stop loss here as well at the same time. If the markets come down and execute your price, the trade station will do that for you. Either it's MT4 or MT5, whichever you're using, and then after that, it will start going up, and when it will reach your target price, if it does reach there, then the order will be executed again. The market will sell it for you, the trade station will sell it for you automatically, and when you come home, you see that you have made 40 pips profit, right? So that's excellent. Same thing with the sell. Now the market is hovering around here, for example, is hovering around 100, but you don't like this 100 price. You're saying, no, I would like to sell when it comes to 110. So you place an order on your trade station. Every trade station will give you option to do limit orders, entry of future orders. So you can't be bothered to sit and wait. That's fair enough. Everybody got things to do unless you're a day trader. So you place your sell limit here, sell limit at 110, and you put your buy limit at 70, for example. So you're selling, all right, I've done my limit order. Now, either way, obviously, don't ever forget the stop loss. I explained the stop loss to you next slide. So that's what happened. So you place your order, sell limit order, and you go away, do whatever you have to do, come back after a couple of hours. If the price will get to that level, your trade station will automatically execute it, and if it comes down to your profit level, then it will buy back for you. And as soon as you come back, then you think, I've got my 40 pips profit, and lovely jubbly, very nice, and happy days. Now, the last one is the stop loss. Stop loss, I cannot insist enough. The stop loss is the main thing in money management and save your life, save your money. Now here, for example, I'm going to buy. I have a price. I've got the market price here. Either it's a sell order, a buy order, and a limit. It's a buy. I want the market to go up. I want the market to go here. Limit or slash profit. Right? Now, I place an order or market order or limit order, whatever. Once I get the price, now I must put a stop loss. Stop loss is whatever, 10 pips or 20 pips or whichever you decide. I never use more than 3% of my investment in one trade. 3%, let me write it down, 3% investment in my one trade. Anyway, for the whole, right? So anyway, I've done this, but the market, instead of going in my favor, it starts going down. It comes back again, and then instead of going up, it starts going down again. Now, when it comes down to 20 pips or whatever your stop loss is, once it hit the market and go even lower than that, then doesn't matter. Your trade station will execute your price here, and you'll be out of the market. So at least you know that if I was going to lose £20 and my target here was £60 or £40 minimum, then basically I didn't get my 40, but I lost £20. At least I know where I stand, so I will hopefully make back in the next trade. And never get excited once your stop loss is hit. It's not a big deal. It's going to happen loads of time. Make sure, even out of 10, if you lose 5 and you win 5 and your ratio is this 40 to 20, you will be still in profit. So anyway, that's what the stop loss is. Hope I made myself clear. Have a lovely day.